Welcome to Streetwise Mortgages August 2024 market update. I'm Dalia Barsoom, and today we are diving into the latest trends shaping the Canadian real estate landscape. But before we jump in, let's talk about something important. Context in the financial news. You've probably seen headlines like these lately. They're designed to grab your attention, and sometimes they can be a bit alarming. But here's the thing, numbers without context can be misleading. So today, we're going to look beyond the headlines and give you the full picture. Let's start with the big picture. Inflation is cooling down, which is great news for investors and homeowners alike. In July, we saw headline CPI drop to 2.5 year over year. That's the lowest since March of 2021. And the Bank of Canada's core inflation measures, well, they're down to 2.4%. What does this mean for you? Well, markets are now expecting rate cuts at every meeting this year. We're looking at a potential overnight rate of 3.75 by year end, with another possible 1% rate cut in the first 9 months of 2025. Now, let's talk about those scary headlines. You might have seen one recently about mortgage delinquencies in Ontario, saying that mortgage delinquencies have surged by 67%. That sounds terrifying, right? Well, here is where the context is crucial. Yes, there has been an increase, but I want to break down what this number really mean and what's really going on here. In Q2 of 2024, Ontario had about 3,000 mortgages in severe delinquency. That is a delinquency rate of 1.6 per 1,000 mortgages. Now, compare that to 2014, which wasn't considered particularly a bad year for real estate. Back then, the rate was 1.8 per 1,000 mortgages. So, while yes, there has been an increase from the record lows we saw during the pandemic, we're actually just returning to normal level. Folks, it is a classic case of percentages being misleading when we're dealing with very small numbers here. Now, let's zoom out to the national picture. Across Canada, the mortgage delinquency rate is actually lower than pre-pandemic levels, where we're currently at 1.6 per 1,000 mortgages compared to 1.7 per 1,000 mortgages in 2019. But what about the housing market itself? July gave us some interesting data. Housing starts surged 16% month over month, hitting 280,000 on an annualized basis. Sounds great, right? Well, not so fast. This surge might be temporary. Many developers were rushing to get ahead of the changes that CMHC implemented to the MLI Select program. In fact, we're seeing building permits for multi-unit construction decline significantly, down to 25.7% in Ontario and 31.1% in British Columbia in June. What does this mean for investors? We're likely looking at a slowdown in construction activity in the coming months. This can lead to future supply shortages and potentially creating opportunities in the rental market and for well-positioned development projects. Now, let's take a look at the current market. Home sales were down slightly in July, 0.7% month over month and 3.7% year over year nationally. But here is where it gets interesting. New listings hit 10 months highs, which is up 6.5% year over year. Active listings across the country were up 25% compared to last year. In Ontario, that increase was a whopping 47%, and in BC, 36%. More inventory means more options for investors who are looking to expand their portfolios. But I want you to be cautious because this could also put pressure on prices in some areas. Let's wrap up with a quick look at some broader economic indicators. We are seeing a slowdown in business loan growth and manufacturing sales. Consumer insolvency filings are up 12.4% year over year for Q2, and consumer spending showed a decline in July, particularly in discretionary categories. These indicators suggest some economic headwinds. But remember, context is key. We are actually coming off a period of exceptional growth and low interest rates. Some normalization is to be expected. As we move into the fall, we are looking at a market with potential opportunities from lower interest rates and increased inventory. But as always, be careful. Do your due diligence in any condition. At Streetwise Mortgages, we're here to help you navigate these market conditions. Whether you're approaching a renewal, considering a purchase, looking to optimize your cash flow, or looking to position your portfolio for growth, do not hesitate to reach out to us at info@streetwisemortgages.com. Thank you for joining us for this market update, and remember, look beyond the headlines and stay streetwise.